Welcome to the deep dive into NIO stock price action. We're going to talk about the whole history of NIO stock as it's been traded in the US. We're going to talk about short term, and for short term, for reference, this is Thanksgiving weekend. Happy weekend, happy Thanksgiving if you celebrate. As I'm recording this, but I'm going to have a lot queued up, so I'll try and stay on point. And I will also create tabs and time stamps down at the bottom. You can just click at the bottom of the video or look in the description and click those if you want to jump around. I also do this so that it's easier for me to go back if I need to pull something up very quickly. It makes it more convenient. So with that, let's talk now the time frame that I'm thinking with respect to the short-term stock price action. And this is the video where I recently referenced the roughly $3.80, maybe $3.70 to 80 cent, that range up to $7.20. My time frame, the way I'm thinking or looking at this is into inauguration or late January. So that's kind of what I'm thinking. And yeah, it's a wide range for that short time frame and period, but I want to share why. So let's go back to this chart. And I've zoomed in. We're going to have a few different times where we'll zoom in on different things with the NIO stock chart. This is the point that I want to make now. We've got three elevated spikes on the FTDs. The FTDs are represented by the white lines. That's when there could have been naked shorting going on that could lead to suppression of stock price. But I want to talk about the positive or the upside first. And so this is the $7.20 level roughly that we got to that day. Now that happened, that was in early October. And if we go back in time just a little bit, about a month earlier, we had the second quarter earnings for NIO. And one of the things that happened was during this time frame, we saw the stock price move up. Most of the days it was moving up, we had significantly higher daily trade volume. And that is why I have it at the bottom of the screen as the number one or the easiest indicator to watch and track, because every day that the market is open, we get to track that daily trade volume. And on those days where we saw NIO stock move up after that second quarter earnings, we had big volume, usually at least 100 million shares traded on those days where it was moving up. So that's why I keep it as sort of the first, not that it's the most important, but it's the easiest for me to track and watch. Second is the FTDs, the failed to delivers, which I referenced before, represented by the white lines. The problem with those is we never get real-time data on this. And there's another challenge with these as well that I'll talk about later. So just hang in there. We'll get to it. But it basically further validates the reality that we never get to see real-time data on the FTDs because it's always delayed. For example, this third recent spike that we've had, which came in after the kind of near-term peak with the stock price, this was a big and elevated level. All three of these spikes were bigger than anything we had seen dating all the way back to 2020, back when NIO actually made its really big run with the stock price. And so that's why these caught my attention. And I didn't know, because we got this data delayed, if this would impact this coming down. Perhaps that's part of what we're seeing. But either way, whether you want to talk about sentiment being up or down, the reduced or minimal trade volume in the short term since this third quarter earnings, we haven't seen. I don't think we've seen a single day with 100 million shares traded or not. So whether you want to factor that as partial sentiment or not, or whether it's simply a matter of not enough interest, whatever that is, the fact that the trade volume was higher after that second quarter earnings and we saw the stock price move up with that, I do think it is a good indicator to keep an eye on and keep in mind, especially as we never get to see the failed to deliver data in real time. It's always delayed lag data. And that's also why I want to keep a wider range with respect to stock price, because if there are lower trade volume days, it is potentially easier for shorts to suppress or mess around with stock price. More on that a little bit later. But I actually want to go to big picture briefly and talk about Tesla, because I think Tesla is a wonderful example of perhaps the ultimate short squeeze that we've seen. And a couple of things happen for Tesla. If you look at the white lines, this is a whole trading history for Tesla in the US. And the failed to deliver data was so elevated for so long. I actually think that may have contributed to the big moves that Tesla ended up making. In other words, the short-term thing that may be the biggest frustration for people like NIO stock investors, feeling like there's a lot of suppression and manipulation and that sort of thing, this predatory shorting, if that's in play, that actually could set the table for bigger moves for NIO stock down the road. But for Tesla, it wasn't until the first full year of profitability that Tesla made its really, really big move. And that also was the time frame where it got included in the S&P 500. I think that matters. I think those things contributed additional buying pressure. The concept overview is big for me, and big picture, that's why I've had in mind and have said regularly that I think NIO Stock, basically the crushing the short thesis and NIO Stock perhaps having its best chance to really move is going to come after profitability. That's my thinking. And I will be doing another deep dive video in the future with other companies, but I didn't want to get too far offline with this. I know there's a lot to still cover in this video. So now with that, I want to look at NIO. And this is what's interesting about NIO and NIO Stock. Even though NIO was not profitable at this time frame, it's very likely that we saw a short squeeze. So what that makes me wonder is, relative, and I'm not expecting it to move. Frankly, I don't need it to move like Tesla moved to be very happy with where this thing is going to go. But it does raise the question, if we look back at Tesla, because, on the one side, Tesla had a lot more years of this heavy fail to deliver volume, but it also didn't have the big move with the stock price at an early stage. So while I don't want to do a full-on comparison in a shorter time frame without being profitable, NIO Stock has shown the potential to rocket up. And if the fails to deliver in the elevated levels as what we've seen in these last 3 years have been increasing, does that actually create more of a trampoline effect where NIO Stock can move higher when it is ready to go? That's what I'm thinking. And so again, back to sort of even within this short-term time frame, we have this range, I think, where we could see this thing go. We have seen it have the potential to move from $3.50 to $55 in just 6 months. I mean, the thing can actually absolutely rocket when it wants to, NIO Stock. So this, I think, is noteworthy, and it also aligns with my time frames. So I wanted to mention it, and shout out NIO Switzerland. I think this view or mentality is very common among retail investors. And I think this is global retail investors, not just Americans who are paying taxes, and hope that we can see more fair markets and maybe even some real or true price action in our markets in the short term. But here's the video where I talked a little more in depth on that. And I don't want to actually regurgitate all this. That's why I will include it with everything else as tabs and links in the description so you can check them out for yourselves. But to highlight what I said in this, NIO Stock short squeeze, and is it more possible now with the new administration? And then I tied in the DJT and Citadel spat and why that could matter. And the Citadel, interestingly enough, is shorting both NIO and DJT and lots of others as well, including Alibaba. But perhaps we will see with this new administration, and aligned with this guy leaving, well, Gigi being gone, maybe we see somebody come in who actually goes after some of these nefarious or potentially predatory short sellers in the US markets. That would be wonderful. Here's the next thing that I want to highlight and talk about, because this is a little bit of why I do a range. I don't want to minimize or limit the view of the effect of fails to deliver. So for example, if we get them 15 days later or even 30 days later, I've always got this in mind. Number 8 here reads, fails to deliver on a given day are a cumulative number of all fails outstanding until that day, plus new fails that occur that day, less fails that settle that day. All I want to know is that cumulative being in caps highlighted. That means this could be building up. So all we know is the date they're being reported. We don't know when they're actually taking place. And that does muddy the water a bit. But all I need to know big picture concept overview wise is it's already delayed data, and now it may be further delayed. I'm just never going to know. And that's why I give it 1 to 2 months at least on each side of, let's say, when we see the fail to deliver spikes, for when I think it could impact or affect stock price action. Now, here's the other part is number 11, reg show. A broker dealer has up to 35 calendar days. So right there, they're telling us that this can be over a month. And reg show is supposed to be one of these things that I think the intentions were to protect investors and to keep things more honest. And I'm not going to say much more than that because we'll talk about it more in here in a minute. Let's move on now to the world's top hedge fund billionaires after profitable 2023. And this is Ken Griffin, and he is he's made a lot of money with Citadel. They are a market maker, which means they get some allowances through reg show. They also are a short in a lot of companies, including, as I said, in NIO. In fact, back in, I think it was the fall of 2021 when NIO stock was trading over $40 a share. And I said, hey, heads up, this is a suspicious short Citadel that I want to keep an eye on. They're getting involved in NIO, and we've just seen the stock price go down, but more on that in a little bit. These are the gains. And I just wanted to share this to kind of put things into context and big picture overview. If Citadel made roughly $8 billion in gains in 2023. Now I want to move over to this, and I'll just highlight this. I don't want to go in depth on it, but why Citadel's longest running equities unit is focused on shorting stocks. I'm just going to cut to the chase. I think it's very profitable, and they know that. But now I want to go to how the globe and different markets globally have viewed Citadel and have taken action against Citadel, including the fines against them. This is probably the biggest deal I thought. China, back in, I think it was 2015, fined them $97 million and did not allow them to trade in their markets for several years after that. This is, well, to put it into context or comparison, $97 million, that was a fine from China. And they didn't allow them to trade there for several years. If we move over to South Korea, they also fined Citadel, and this was for algorithmic trading breaches. But here's what I want to highlight from this one. The almost $10 million fine talked about Citadel disturbing the local market with high-frequency algorithmic trading. Now, here's the thing that's interesting. The firm carried out such trading on an average of 1,422 stocks per day from roughly 2017 to 2018, October to May, totaling more than 500 billion won worth of trades, according to the statement. Here's what I thought was interesting. The South Korean stock market has a high proportion of retail investors and little competition among algorithmic traders. I thought that was interesting, especially if we want to go put on the conspiracy theory hat for a second and just say, hey, it's meme stocks that have been targeted by companies like Citadel, perhaps, allegedly, maybe. Let's keep it moving, though. This is what the SEC has done, and probably some of the outrage that a lot of retail investors have for folks like Gigi, and why they might be glad that he's going to be gone, hoping somebody's going to come in and do more, because this is what was published. This is one of the, so again, South Korea fined him almost $10 million, Citadel I'm talking about, and China fined him almost $100 million and banned them from trading for years. This is what the home country does. Citadel charges, or SEC, excuse me, I got Citadel on the brain now. SEC charges Citadel Securities for violating order marking requirements of short sale regulations. And I do want to read a little of this because they talk about broker-dealer Citadel Securities LLC violating a provision of Reg Show. This is the regulatory framework designed to address abusive short selling practices. And so, this is, if we go a little bit further, to settle the charges, Citadel agreed to pay $7 million. Now, here's, according to the order, for a 5-year period. Now, remember, just in 2023, they made over $8 billion, right? It is estimated that Citadel Securities incorrectly marked millions of orders inaccurately, denoting that certain short sales were long sales and vice versa. So if they're mismarking things, even if it's unintentional, that means we don't get to see true price action. There's no real price discovery. And so that's one of the reasons that, for me, it's made a lot more sense. I'm glad that I have always kind of had a long-term time frame, because as I learn and study and dig into this stuff more and more, I'm like, wow, short-term, there can be a lot of manipulation potentially going on, whether intentional or otherwise. But we're not done. This is the other thing. Finra came in with 2 different cases and rulings. And this was, according to one of their rules, they talk about reportable events. And they found that, among other things, Citadel inaccurately reported data fields for approximately 42.2 billion equity and option order events. That's more than a couple. We're talking about a lot. And interestingly enough, this is another, you know what? I'm just going to leave this stuff down there so you can do your own digging and research, because again, I know this is a long video and I'm going deep. Here's the way that I think about this. The next topic we're going to get into. because this is in the European markets. This is one of the things that's happened. And the time frame aligns a bit with that 2021 year that I mentioned as when I saw or recognized that Citadel, the suspicious short was getting involved with NIO Stock. And this is synthetic, fabricated, manufactured, counterfeit, fake. Okay, you get the picture. Now, here's what's interesting. I'm going to show you two of these. I have no idea how many there are. I know there are more than just these two, but a couple different reference points and the dates on these. And then the synthetic word is the thing that I want to show you. So this is one of them. And again, just look down in the description if you want to, check this stuff out for yourselves. I'll share the links to it, to them. And where is it? I've got it highlighted, I hope. There it is. Inception date for this. March 3rd, 2021. All right. And this is in Europe. And now if we go down just a little bit further, this is the part where we see the 3SNI ETF provides synthetic exposure. It uses derivatives to replicate the index's performance. So this, and then here's the other one. And again, there are more than this out there. I just pulled a couple to show you because concept overview, I wanted to see the time frame and tie that in. Listing date for this, March 8th, 2021. So we're talking about March 2021 roughly. And if we go down here, replication method, synthetic. See that word again. All right, now let's look at the NIO stock price chart with the FTDs and look at the price action from about a month before this. So February of 2021 into, this would be March here. So this is when the inception of that kind of took place somewhere in here. This is the first, and this is the 8th. But what's interesting is if we go out just a little bit further and also take note of these, perhaps incidental, but this is the US data that we're looking at now. And so imagine if there is an alignment of folks who want to short, whoever they are, who choose to short certain stocks, perhaps NIO is one of them, and they knew, or even participants perhaps, in the setting up of these triple leverage and maybe even more leverage to the downside so that they could actually continue to suppress or mess with stock price or short across multiple markets. How interesting is that if we look at, and so this is why stock price, we're in the high 50s and low 60s at this point. This is about February 9th of 2021. And we get this nice spike on the FTDs, which was reported February 22nd. But again, there's at least a 35 calendar day potential window there. So it could have gone back even further than what we're showing. But what we do see after that is the stock price comes down for NIO. And at this point, it's in the high 30s, mid to high 30s. So already there's an impact. At the same time, this is a time frame where those European triple leveraged negative short potential plays come into existence. And I have no idea how many there are. But I know Wes Christian, who's a superstar attorney who is actually, I don't think he's ever been taken to trial by shorts. They always settle out of court. I think the reason they settle out of court is they don't want some of the price or actual discovery that shows maybe some of the nefarious things that they do to become published. And so anyway, he had talked about how he thought perhaps there was even more shorting going on in European markets. And if swaps and synthetic, basically fake shares are being used and available and at leverage plays, then it does make sense that that's possible at least. But let's keep it moving because within the same time frame, we're now just into April of 2021. And here's another spike. And what do we see? The stock price for NIO, and this is about May 13th of 2021, is down to the low 30s, between $30 and $34 roughly on that day. So quite a range in a short period of time. Now, again, when we've seen NIO stock move up and move up big time, here's what we've seen. A couple of things, and it's why I keep it at the bottom of the screen, at least for now, and I'll keep it there until I'm confident that we're in a clear uptrend. And I do think we may have to wait until late January even, but that doesn't mean it couldn't happen sooner. I do think the super easiest short-term indicator is going to be the trade volume on the daily side of things, because if we look back at when NIO stock made its big moves, a lot of these days, like a random day here, you had, let's see, a day when it's going up, 157 million shares traded. How about a day when it's coming down? 92 million shares traded. How about on the upswing, 117 million shares traded? How about a big move up? 221 million shares traded, 181 million shares traded. I'm just reading out random days during this time frame. But the other thing, again, going back to big picture overview, these three elevated spikes on the failed silver, and look at how much more of the FTD stuff is showing up now compared to this time frame. That's the other thing that left during the time frame when NIO Stock really ran was, and again, if we go to March, this is March of 2021. So this is the time frame right in here where the European, triple levered and the shorting in those markets became even easier for firms if they wanted to take advantage of it. And what do we see? Big downtrend with the stock price in the short term, and then eventually the FTDs pick up in the US market. I just think this is so fascinating to dig into and kind of nerd out on this stuff. So I guess my thinking, big picture overview, nothing changes for me because it's been long-term, because I think profitability is really important. But I'll say this, I personally won't mind, I won't be upset if there continues to be suppression or this predatory shorting or this sort of thing, especially if it contributes to NIO Stock eventually moving higher or maintaining a higher price point once it does go. And I do think that profitability for NIO is key for crushing the short thesis, but I'm also not worried about NIO running out of money. They have their partners aligned. I think they're in a beautiful position. Fundamentally, they're so much stronger now than they were back in this time frame when the stock price ironically ran so much. But maybe in this year of 2025 that's coming, we're going to see something crazy like this happen again. Short term, if we're talking only short term, I've got it at the bottom of the screen very intentionally. Trade volume, easiest thing to track because we can track it every day. The FTDs, the failed to deliver, is delayed data, but I'll keep sharing it and talking about it as we get it. As you see on screen, I think the NIO Stock chart is beautiful with the FTDs. I think it really shows a few things, especially if you dig down and look at the bigger, higher trade volume days and how a lot of those days NIO Stock moves up. And then it looks like those other days, there's a lot of FTDs and maybe shenanigans going on that perhaps is contributing to not just, the selling pressure, but also the sentiment to a degree, because I wonder when I see the negative comments, in the comment section on my or other videos, I just wonder how many people would have negative comments if NIO stock price had just moved up, a certain percent or $1 or a couple of dollars. I wonder how much is directly tied to the negative stock sentiment and sort of the psychological aspect that could be in play. But I'm really curious what other people think about this. I wanted to do this longer video, a deep dive. I hope it turns out okay. Come back and see me again. I've got another very long one that I need to do, and I don't know when I'll get it done, but it's one where I'm going to talk about NIO as an IDE and compared to other companies that I consider IDEs like Tesla, like NVIDIA, like Amazon, Netflix, companies that I think at different time frames or points before maybe they were proven out and the short thesis was thoroughly crushed. Maybe they weren't as profitable at that point or profitable at all. And there may have been a lot more of this FTD data showing up, a lot more shorting, perhaps even predatory shorting. And I think that could be, as I said before, a contributing factor to the stock price eventually shooting. Thanks for stopping by. Let me know what your thoughts are on any of this. I'm very curious to hear what other people have to say. Thanks. I'll see y'all again very soon.